Good morning, friends, and a very warm welcome to this highly anticipated webinar on secured lending. Your presence here underscores the importance of robust lending practices in today's financial landscape. His decades of experience will provide invaluable insights into the intricacies of. So, whether you are a long standing member of our community or joining us for the first time today,
there is definitely improvement in the employment, and therefore the income of the persons, of the factories, of the trade business, etc., and thereby helps our economy to boost the GDP. Of course, when we are lending, we have to remember that we are basically we accept the deposits from our customers, and their interest must be protected. As such, before and after the loan availment, so there are two steps in a way we can say. It is before the availment and after the availment. Particularly after availment, definitely it is the post sanction inspections, etc., that matters much more. So once we are having perfect loan documents, then only the question of charging, creation of the charge, perfection of the charge comes into the line. And therefore, let us first discuss about the creation of the charge, that is, I will say, loan documentation. Now, when we extend loans, our loans are of different. These assets further, they can be tangible and intangible. Tangible means having physical existence, whereas intangibles, they do not have physical existence. These intangible assets, in a way, they're the expenditure which creation of charge is to make the security available for repayment of the loans. So creation of charge means the security will be made available. Then competency, in respect of competency, if it's a person, it must be major. And the important aspect is that they understand, that is, whatever transaction which is going on, whatever documents we are creating, the concerned person should be able to understand the underlying transaction. This is most important, and therefore he should not be insane, or he should not be a person who is declared insolvent. Tattoos, etc., all these things make a document. So in short, documents is a written matter. Execution of the documents. Now, what is this execute memo of signing? Memo of signing means the concerned officer in whose presence the documents are signed, he will prepare a memo. It may be prepared nowadays automatically through the system, but the documents are or these documents, the statement will be there. The different documents affecting the proper stamp duty can be there. Okay, but executing the documents after, that is filling of the documents, only should be, that is executing of the documents should always be after filling and after affixing the proper stamp duty. This is, kindly remember this particular thing, this is very important. Then after completion of these documents, they create, and they are enforceable, like that he certifies after going through the document. If there is shortcoming, he has to point it out, and it is to be rectified then and there only. Remember this thing. Waiting of them may be necessary in respect of certain documents. Say a bank policy says that their acknowledgement should be obtained, that they have accepted the terms and conditions of sanction by them. So far as the personal loans are concerned, so far as the loans of the firms are concerned, definitely we are taking, along with the stamp, the signatures are to be put up by the concerned person, so that is called as an acknowledgement. Even acknowledgement must be there, that who will be the authority to sign the loan documents on behalf of the institution or corporate. Similarly, further, there will be necessity of handing over certain assets to the bank, or creating a charge on the assets. So who are the competent authorities to undertake? We get the securities. If suppose there's a FD, they hand it over, hand over the securities, etc. Or if it is, it is in the form of goods, etc., then we create the charge. So like that, the borrowers and guarantors should be called in the bank, and because of this thing, we get, I will say, we get a we get an attestation, we get on that particular security, which will be available, and if it doesn't pay that particular security, we will be able to go to the market, we can sell the securities and get ourselves repaid. And this particular aspect is, we can say, the bank documents are printed forms. Important aspect here, kindly remember that bank documents are printed forms. They are called as standard form of contracts. Standard form of contracts means agreements in your state. Okay, in different state, the agreements carry different amount of duties. For example, in Maharashtra, all the agreements, in general, they carry a stamp duty of 500 rupees. Somewhere it may be 10 rupees also, or there may not be any duty at all. It may so happen. Okay, so this is the master document, master facility agreement, where it is basically, acha, then along with this, if the loans are of the demand nature, say demand loans, or WCDL, CC, OD, so these are the running accounts. If the running accounts are there and the loan is sanctioned for 12 months, we generally take a DP note in respect of a demand promissory note. And along with this demand promissory note, so these are the agreements which create the charge. So first agreement, naturally, first aspect is section 1 is to obtain article of agreement. So for almost all the loans, will say we obtain articles of agreement. Of course, not for demand loan against FDs, etc. But in respect of other accounts, yes, articles of agreement is obtained, and along with that, so when we complete this, along with the registration, the documentation aspect will be complete. Now, documents as per constitution of the borrower. Let us go one by one. When the account is closed, there should be, if we are having some security, if for example, if we have sanctioned a gold loan, then this gold loan, if an account belongs to A and B, to whom we should hand over the security at the closure, that must be taken by us. Otherwise, sometimes we may find it difficult at the end. My firm, the name of my firm is such and such, I am the sole proprietor. This sole proprietorship declaration may also be embodied in the current account form also. Okay, that also will be, may be embodied. If it is embodied, then sole proprietorship declaration form may not be needed in respect of the type of borrower. These persons, these individuals, these natural persons, they should come together, and they decide that we are running such and such business, we will run, it is expected that we will be obtaining the certificate of registration. Now, here Udyam Aadhaar registration will be always there in respect of proprietorship concern, or we can say that this is the birth certificate of that sole proprietorship concern. Of course, they will need also the shop and establishment. If they have registered, that is also firm has begun its business, will be written, and who are the partners will also be written. Always along with that, if that partnership firm, like that, there should be a resolution to approach a bank for various credit facilities after sanction. There should be, again I will say, there should be again a board resolution wherein clear cut, I will say, terms conditions have been accepted by the board. There should be resolution for that purpose, and it should refer to the sanction letter given by that this thing, corporations or government bodies or gram panchayat, etc. So these are the government organizations. They are run as per the charter, as well as capacity as a partner. Here LLPs, being a limited company, the persons will be signing in the form of a director, and those will be binding, that is, these agreements will be binding to the partnership firm, but their liabilities will be defined in the LLP agreement. To that extent only, they will be responsible for the loans. Powers of the trustees to borrow and give trust property as a security has to be clearly initiated or written in what is commonly known as a trust deed. This trust deed is to be registered with a charity commissioner, and he may put some If it's a limited company, then whatever limited companies papers are there, they will be required for as per constitution. If it is a society, then requirement will be according to the cooperative society. Here we have seen those papers will be there in order to sanction loans or disburse loans to these people. Then documents are per type of facilities. We extend different types of loans. For example, we extend a demand based loans. We have seen for demand based loans, the basic document is DP note, demand promissory note. In respect of such type of loans which are sanctioned generally for not more than 3 years, not more than, we obtain always obtain a demand promissory note, and demand promissory note, under that note, and therefore we obtain a letter of waiver which may be again embodied in the earlier documents, other documents. If it is embodied in that, or if it is embodied in the agreement, then there is no need to obtain separate paper, otherwise we have to obtain. Then bills, etc., the bill discounting will be there, supply bills will be there, issue of CPs, etc. These are the fund based advances. And in the new term loan, now supplemental document, supplemental term loan, again the party will say that we have, it is such and such loan was there, now it is rescheduled, there will be reschedulement that will be mentioned in this particular agreement. Then in respect of bill purchase agreement, there is a special bill purchase and bill discounted agreement. LC agreement means how much amount of the how much amount for which they desires to have the LC can be embodied in such a way that it will also create a charge over the properties. This can be possible, and this may be possible for this thing. So agreement of guarantee or letter of guarantee, in all these cases, remember, in all these cases different loans may be there, and for covering those loans we may obtain what is commonly known as a guarantee. This is a third party guarantee. Securities which are identifiable should be taken as our in our charge. They should be marketable. So for those securities, market means they should be sellable. For a weaker section, the margin will be different. Housing loan for such and such amount and above, there will margin will be changing. Margin should be available during the entire tenure of the loan. This is also important. Margin should be, if our margin is 25%, it should be maintainable throughout the tenure of the loan. Means if the value of the security is going down in respect of loans for the cash credit loans, means in respect of cash credit loans, the our charge on the same fixed asset can be, we can create a second charge over them. The right of the second charge holder is a subject to the right. Suppose on the first on a particular thing, on a particular land or on building, there can be first charge by ourselves, and somebody on, we can accept, a banker can accept a second charge by some second person. Second person means second company, second bank, second financial institution. That charge will be called as second charge. Then paripasu charge, it means equal footing. So whatever outstandings are there, and a bill of lading is there, if we delivers the bill of lading or a warehouse receipt along with the endorsement, he gives us to that particular thing, then the, it will be in our control. It will be called as bailment of movable goods. Okay, this is a charge which is created on that. Examples are, common examples is gold loan. When the pledgee, that is the golds are uh, a charge in or upon any movable property. So hypothecation always and pledge both have them. They are the movable property basically, and but it is in respect, if it is in respect of current assets, it will be pledge. If it is current assets and other than current assets, also transfer of interest in a specific immovable property. So mortgage is transfer of interest in immovable property. It is transfer of one of the rights. Remember,